Consolidation. This is the word of the day yet again. Jen McGinnis. I
Very
think I
true.
think it's still fresh enough to call this breaking news. How are you?
I'm good. How you doing, Greg?
I'm doing well. It's always great to see you, and it's always great to follow you on LinkedIn too. You just hit submit on a post surrounding the very latest between PennyMac and Cenlar. The consolidation continues. You wrote all about it. Let's start right there. What do you think about this move and what it means for both companies?
Well, I mean, it's not a surprising move. I mean, as you start to look at, the top of even, the Scotsman Guide top lenders, you're expecting something like this to occur, right? And I think, it makes sense, right? PennyMac, sits at the top of many of the tables as well. And, without, continuing to grow their servicing business, how are they going to continue to compete? So I was not shocked by the headline when it came out yesterday. Were you?
No, but it was a little peculiar to me only because Cenlar is a sub-servicer, right? So this isn't necessarily an origination play. What are the mechanics behind, taking this on as opposed to being the full servicer? What are the differences, and how does this limit or expand opportunities?
Well, I think that's a little bit of a misconception, right? Yes, Cenlar is generally a sub-servicer with, 100 clients plus. So they have a bunch of different clients. But at the end of the day, PennyMac is not buying that to only be a sub-servicer. They're going to put their own servicing into Cenlar as well. And, that servicing is significant. And if you look at the numbers, when they consolidate the servicing, assuming that, almost 500, is not lost in servicing, which is the sub-servicing component of the projected new pool, which is, $400 million. I think it's almost 500 million. If they don't lose that 500 million, they too will be in the trillion+ dollar servicing ranks.
Just incredible, incredible. And so how many are nearing a trillion in servicing? And are we going to get to a point where there's just a handful of outfits at a trillion and north of that, and that's what we have?
Well, I mean, the Rocket Mr. Cooper combination is just shy of 2 trillion, right? PennyMac, in theory, if they don't lose the sub-servicing relationships. And one of the things that I think is interesting about Cenlar's portfolio is they have a lot of credit union and bank sub-servicing clients, not just independent mortgage bankers, which is why I actually see an opportunity for recapture and new origination for PennyMac, but their correspondent clients may not want to hear that, because at a sub-servicer, those bank and credit union portfolios generally will not get solicited by a sub-servicer. But remember that PennyMac also directly originates. So even though the announcement came out that this is really a servicing revenue play, I said to myself, do I believe that? And then I started to think about what I know about these businesses and these consolidations overall. And I said, well, maybe PennyMac doesn't intend to originate the loans and keep them, because God knows they're not doing that now. They're a large lender, versus their servicing book of second liens. And they sell those loans today. A good example is they sell a lot of them to Ellington. They're in the Ellington securitizations, but they sell them to others as well. So maybe it is a play for, mortgage servicing revenue for PennyMac, but also loan sale based revenue, similar to what they're doing on their second lien book with, Ellington and a couple of others. Maybe they will, now do recapture on these MSR portfolios. And, what I posted about, I think tells you that's probably going to be the case. And, maybe they're going to sell those loans if they're not going to keep the loans,
Yeah,
right?
what's really
And keep
interesting
the MSR.
about what you pointed out is there is one particular REIT that has their hands all over most of the transactions that have taken place in the MSR consolidation space. This is not something I knew or thought about. Please peel this wide open for us.
Yeah, so there are strategic partnerships that take place on Wall Street, and as I started to say, what are we maybe missing here, across these consolidations? Because everybody is, talking about Rocket this and United Wholesale Mortgage that. Well, there are strategic partnerships in place with Annaly Capital Management on 3 of the 4 consolidations that were announced in the last year. The only one where I don't know of a strategic partnership with Annaly, which is the parent company, by the way, to Onslow Bay, is the United Wholesale Mortgage acquisition of, Two Harbors and the servicing component that was also acquired there, Round Point. So you will see that, for example, the Bayview Guild consolidation, they've had a strategic relationship with Annaly since 2017. You'll see that Penny Mac put a strategic relationship in play with Annaly in October of 2025. Mr. Cooper really grew a lot of its servicing by virtue of a strategic relationship with Annaly. I believe that started in 2022, and then they decided to work with Mr. Cooper on the growth of their servicing book, which was at that point in time, they took in, I think it was 2.7 billion in servicing at the time. And, just in 2025 alone, they bought, approximately 60 billion more. So if you think about that, going from almost negligible amounts of servicing at Annaly to today with a $242.8 billion servicing book, that's a lot of servicing and fee income to dole out to different servicing entities,
Yeah,
right?
well,
They don't own their own.
yeah.
And
Let's look at this. Let's look at this administration and
yeah.
how that could impact a company like Annaly that seems to have their fingerprints all over, as you just pointed out, many of these deals. The Trump administration wants rates to go down, and they want to pull a bunch of levers. When you've got this much exposure, what could a significant rate drop do to impact the returns?
Well, I think, Annaly generally owns a lot of the MSRs with very low coupons. So a lot of their strategy has been stick with those low coupon loans that, the borrowers are generally stuck, right? And, a lot of what the industry is focused on right now is how to get those borrowers unstuck. So I think last I looked, their average coupon or rate on the loan portfolio is somewhere between 3.25 and 3.5. It might be, a little bit higher than that. But when you think about that, rates are not there today. With that said, however, with all the different affordability questions, different structures, this and that, if all of a sudden their MSR book started paying off in rapid fire, and that's anyone's MSR book, not just Annaly. There is a ton of MSR owned here. It'd be the same thing for Rocket, Mr. Cooper. It'd be the same thing for other large MSR owners, right? But they are going to lose money, and they're going to lose it quick. What nobody likes to talk about is mortgage servicing rights are one of the most volatile assets to hold, right? They could be great for you one day and bad for you the next. It's all about what's going to happen in the market environment.
Yeah, well, you have traded securities. You've been on every aspect of this industry when it comes to originating loans and selling them off and all these great things. So bring us to the table of what goes into a decision to buy servicing in a moment like this, whatever this moment is, when you have people sitting around a table saying, what do you think about this possible acquisition? Is it at this point acquire servicing at all costs, or are there variables you can point out?
So I think there's a few different things. They've been acquiring servicing in a big way for multiple years now. So it's not like they just decided to buy $200 billion worth of servicing today, right? So this is an overtime strategy. They've been very, straightforward to their investor base that their goal is going to be to have their overall portfolio be 20% invested in MSRs. And, last I looked, they're at 19, right? So now it's, mortgage-backed securities, generally agency, and, residential credit, 30% of the book, and they want 20% of the book to be in MSRs. But again, you got to be careful with the MSR because those loans start prepaying like rapid fire. But here's the important but here. Look at the different places that they have the strategic partnerships with. Rocket, huge direct retail lender. Okay. PennyMac has grown their retail origination business significantly off of their servicing book, doing a ton of second liens. Okay. Those second liens are in excess of 1.6 billion today, right? And they're selling those away. So they've proven that they can, in fact, originate loans off their servicing book. So again, direct origination capability. Bayview bought Guild. Guild, absolutely, as you know, direct origination capability. So I also see these strategic partnerships not only as fostering the means by which to have your servicing be less costly. But on top of that, in a doomsday scenario, rates start to move away from you. You now have direct lenders as your servicer as well.
Mm.
And those direct lenders can then, go to those servicing clients and attempt to keep them in the fold, for lack of a better way of saying it. If I'm going to lose money on one side of my MSR book by the loans paying in full faster, well, then I want to be closing those loans again to get that recapture right back into my book so I don't lose money. Right. And I think that that's an important question or an important thing to be looking at.
Well, what about for IMBs that aren't in the servicing game? What is this? What would you be advising them that this moment means?
Again, I think the independent mortgage bankers need to make sure that they're paying attention to who all of their counterparties are. I chatted with a couple yesterday that are just pivot clients alone, and they service with one or more of these companies, and people are talking about moving their servicing. They are concerned about losing their customer, right? They want to make sure that they have the opportunity for the new loans.
Yeah.
And I do think that, the independent mortgage bankers need to spend more time understanding what the entities that they work with who are aggregators, what are the rest of their capabilities, and are they originating loans? What are they doing? Are they sending those loans back to us? Which, is actually, in my humble opinion, the right way to be working with independent mortgage banks. Be a real partner.
Yeah, you asked a question here at the end of your post, which people should run to your profile, and they should be following you anyway. We have a link to the post here, which you published, this evening around 4:45 p.m. here on Thursday, the 12th of February. Does this give UWM upside? So, look, I'm on the outside looking in here. They had, they had a lot of loans being serviced by Mr. Cooper. That was snatched out, and now it's under the umbrella of Rocket. It's my understanding Cenlar was a sub-servicer of theirs. So, Matt Ishbia,
That's actually where they moved the loans. So when the loans left Mr. Cooper, they moved them to Cenlar. Cenlar was one of their other sub-servicers for UWM.
Yeah.
And now remember, UWM just recently bought Round Point by virtue of their Two Harbors acquisition. So, now it's going to be how fast are we going to move those loans, UWM? But at the end of the day, I think we have a real question here of, okay, well, if UWM is not, entering into these strategic relationships, and UWM is actually buying a servicer and planning to keep those servicers in play, planning to stay a wholesale lender and not become a retail player, which remains to be seen, right? Will UWM end up one of the only places where you will get the loan back to originate brokers or lender partners? And I think that's a question. Now, I don't know the answer to it yet, Greg. Neither do you, right? We have to see what shakes out as all these entities consolidate. But when I start to see Wall Street having strategic moves like this, and Annalie's not the only one. Other guys have strategic relationships like this. This one is just the one that stood out to me, especially as it pertains to all this servicing acquisition.
All right.
And when you start to see this is a protective measure.
But is it also a silver lining of an opportunity we're not talking about? So right now we're mid-February. In just a couple of days, guess what's off the table, Jen? Triggers.
Trigger leads.
So no longer are these books going to get peppered by 20, 30, 40, 50 different entities. Now, I would think, and you live on this side, that the premium for these books is going to be worth a lot more with less people clawing at it.
Well, I think the servicing fee-related income, when you have built-in retail capability to recapture, you're going to get paid more, right, to service these loans, and then you're going to be asked to recapture the assets if rates go down. So I think that's important. One of the things I said, though, recently, Greg, and I don't know if you remember us discussing this, is trigger leads in some ways could have been very protective for these structures, such as those that own not only a servicer, but an origination business, a title company.
No, the trigger legislation, it favors all the bigs. That's what it does.
Right.
Yeah.
Well, actually, in some ways, that could have been a huge opportunity for the big guys to keep in place, because then it's a lot harder for that class, and a class action as an example, for a borrower to say, I didn't know I didn't have any other options. You could subpoena their phone records and find out they got, calls from 45 other lenders. So they knew they had options. Whether they agreed to have the conversations or not was their own, choice to make.
Well, now you're going
But
down a rabbit hole. We could
once
also
that
we
goes
could also
away,
unpack the builder business too, and all the
oh
incentives
yeah,
which keep
that's
people's
another podcast.
yeah.
But
But
anyway,
Jen,
at the end of the day, just keep that in mind. But yes,
yeah.
trigger leads are going away, and I think that's good for all lenders.
So I've heard from a very good source that Wells Fargo is in the process of selling 40 billion book of Ginnie MSRs, and that the rumored buyer is reportedly spending over almost 5.25 multiple on it. That's over 300,000 loans the buyer will look to refi or sell seconds to. It's not yet known. I mean, I think we can all draw conclusions on who might be on the other end of that purchase, but I don't want to get in any hot water. We're talking about 40 billion in Ginnie. Is this substantial, or is just this normal run of the business for Wells?
I think that them selling off that size in one chunk is a message, right? And I think, but you see, it's kind of cheating because I know who bought it. They are absolutely capturing that because they originate that book of business, and they plan to re-originate it as well.
Well, why don't you say the name then? I didn't realize that it was known.
Well, you know who they are too, and you didn't out them, so we'll leave that for the market to decide.
Okay. All right, no problem. Last question. Something I've not seen done at scale yet. I'm wondering if this is the next shoe to drop. Do you see any of these servicers going after IMBs that aren't servicing and trying to get their books of business too by buying them up, by going to maybe a Loan Depot or other companies that
Loan
are
Depot is actually already subservicing with Cenlar a portion of their book.
But they may,
So,
but instead
yeah.
of they may want the origination income too. Like, do you think that that's a play that is going to unfold so that we might look up, or maybe IMBs won't have a choice but to find their way over to the servicers to say, take me on, have my loans. I
I
need
think that
scale.
there's opportunities for some of the IMBs to do a consolidation with some of the more boutique servicers. Or, quite frankly, what may be actually more accretive would be to build their own servicing business, or work with a consolidated asset manager to do that. So, look, is it possible that some of these guys, these particular four, will buy up other lenders? Sure. I think that, they pick these particular lenders because they also are very good at recruiting. But away from that, I do see a market opportunity right now for guys that have bigger books or have grown their books significantly to absolutely have a real servicing play instead of using a sub-servicer. And I think that's really coming to market. But do you know what I think is an even bigger opportunity? A strategy we're working on at Pivot, which is taking that smaller to mid or large size independent mortgage banker and giving them the capability to actually securitize directly in concert with other small to mid-size independent mortgage bankers, so that instead of being beholden, you can now get the same liquidity execution that these big guys are getting, but in a better diversified way for the bondholder.
That's a brilliant idea. In other words, you just take shares and everyone gets
so
their
I'm
own little
not going to
piece.
merge. So Pivot is not going to merge any of these entities. No one's buying them up and consolidating them all. They're all going to stay the business they are today. And those businesses will come together and they will be responsible for the rep and warrant risk, just like they are today for their own loans.
Is that going to
But the
require
difference will be-
substantially more net worth, or only fractionally because they're
No,
buying
because it'll
fractional?
be combined net worth of the sum total of the lenders.
And is this
right?
happening now, or is it going to happen?
This is a strategy that we have been working, as you alluded earlier. I've been a securitizer for more than 20 years of my career. And based on a lot of the activity we've seen in our asset management division and whatnot, we believe the time is now to help the independent mortgage bankers get this liquidity and this execution. So we're having active conversations with the rating agencies. We've built a structure. We've discussed it with the MBA. We've discussed it with certain lenders, and we'll continue to do that. And I think you will see that come to fruition in the not too distant future.
Well, you and I are talking enough that people that follow me are going to know how to follow you. And those that follow you should be hitting that click and contacting you. You know what else helps the bigs? Single file credit pools. especially when it comes to refining. Let's avoid that tri-merge cost. Let's get that one score in, and boom, we're holding the loan anyway. We can just cut our credit cost by 2/3. So now that's something you and I talk about in this coming Monday's one-on-one with Tobias Peter from the AEI Housing Center, and hopefully people can join us at 1 p.m.
Yeah, and
as,
I would say, I think you will very quickly see that discussion is really going to show you. You and I did a podcast recently about this, and I told you you're going to start to see X, Y, and Z happen. And Tobias, actually, in our discussion with him, absolutely told you it's happening. So I think, our discussions, really are important, I think, to what is happening or can happen in the market. And I think there's a lot more of that to unpack. So, I'm glad we're adding value, Greg Shear, right?
Well, of course. Of course.
Part of the job, and that's
I
what
know,
we're doing.
Jennifer McGinnis. Yes. You
Yes,
called me
sir.
Greg Shear. I get to call you Jennifer McGinnis.
Well, it's because everybody says your name wrong. I feel like I had to get it out here,
Yeah, I get a lot of Shers and Shears.
Exactly.
It's Cher. But I can't say Cher like Sonny and Cher because I'm such an old fart. Nobody would even. They'd be like, "Who's Sonny and Cher?" I've never even heard of them.
Understood.
You probably don't even know who Cher was.
I absolutely know who Cher is. Okay. I was actually going to say, you really want to give these guys, something humorous. We could say, "I got you, babe," at the end of one of these.
And we should. You know what?
That would be Sonny and Cher. So clearly, I know who they are.
Hey, look, we'll start practicing together, and maybe we'll share that with everybody at the NBA
we'll
annual.
Throw a nice, fun, and exciting joint karaoke party and have some fun with that in the future.
Oh, that would be amazing. All right, Jen. Great post today on all the consolidation. We'll talk again real soon. Thanks.
All righty, sir. See ya.
Have a good Thursday, everybody.